Good morning, viewers. It's Tuesday morning, April 8, 2025, and I'm your host, Sunil Thakker, a Sunny Talks Money. Welcome to ST Money 7 a.m. early morning news, where we provide you the latest, concise, and precise stock market wrap with accurate figures and numbers. US stocks whipsawed on Monday during a chaotic trading session that saw multiple headlines push around a jumpy market. 90-day pause on tariffs, screamed headlines. This false dawn on the tariff front fueled a brief rally on Monday morning, with the S&P 500 surging some 7% from its low on the day before the White House poured cold water on a rumor that Trump was considering a 90-day pause on implementing the tariffs, sparking the first green turn of the day. The initial reaction showed how much desire there is among investors to return to the well trod territory of administrations that want to assist markets, and stock declines that are quickly followed by sharp bounce backs. The episode, which touched off wild swings throughout the trading day, highlights the increasing desperation on Wall Street as the trade war rout of 2025 extends into a new week. Trading volumes on Monday broke US records for the second session in a row. In early trade, all three major US indexes touched their lowest levels more than a year. Later, all three major averages erased steep losses mid-morning to temporarily trade in green territory before ultimately falling. By the 4 p.m. close, the indexes were little changed, with S&P 500 falling just 12 points or 0.23% to 5,062, its third consecutive day of losses as the benchmark index inched closer towards bear market territory. The tech-heavy Nasdaq Composite closed above the flat line after raising losses and gains numerous times throughout the session. It gained 15 points or 0.1% to 15,603. The Nasdaq confirmed it was in a bear market, defined as a decline of 20% or more below its record close. The Dow Jones Industrial Average was the biggest loser, falling 350 points or 0.9% to 37,966. On Friday, the blue chip Dow confirmed it was in a correction, or more than 10% below its December record close. Last week, US stocks lost $6.6 trillion in value during a two-day washout. In the latest escalation of his trade war, President Trump threatened China with an additional 50% tariff starting April 9 if Beijing does not remove 34% levies on US imports. Trump threatened that additionally all talks with China concerning their requested meetings with the US will be terminated. But this time, some major investors are starting to sound off publicly about what they see as the dangers in the shift to large tariffs. So far, though, it is clear that President Trump and his advisor aren't humming the same tune. Influential Wall Street voices raise concerns. JP Morgan CEO Jamie Dimon warned about the effects of tariffs on growth, prices, and economic alliances that have underpinned America's extraordinary standing in world affairs. He warned a warning of slower growth and higher inflation. BlackRock's Larry Fink, along with other CEOs, feels it was likely that the tariffs had already pushed the economy into recession. Meanwhile, billionaire investor Bill Ackman, a Trump backer, urged the administration to freeze tariff plans to give room for negotiations and called for a 90-day pause on the implementation of the tariffs, saying they are a mistake. CalPERS investor chief Stephen Gilmore has added his voice to the chorus of major investors concerned about President Trump's tariff campaign. The $500 billion pension fund, which invests the retirement savings of firefighters, police, and other public workers in California, has lost about $15 billion since Wednesday as stocks have cratered. Real estate lost 2.4%, the biggest percentage decline among the S&P's 11 major industry indexes on Monday. Communication services were the biggest gainer, finishing up 1%. Technology, adding 0.3%, was the only other sector to advance. In individual stocks, the S&P biggest drags were Apple Incorporated, down 3.7%, and Tesla Incorporated, which fell 2.6%. Its biggest boost came from Nvidia, up more than 3%, and Amazon.com, which added 2.5%. Also during the session, the CBOE Volatility Index Wall Street Fear Gauge breached 60 points, hitting its highest level since August 2024. After pairing gains, it still ended the day at 46.98, its highest close in 5 years. The index has more than doubled in the last month. Treasuries were volatile as investors considered how tariffs could both slow short term growth and rekindle inflation, complicating the task of the Federal Reserve. Futures prices showed traders stepping up bets on multiple rates cut this year. Early Monday, Trump renewed his call for the Fed to ease policy and said his policies were bringing down oil prices and interest rates. Bitcoin and oil prices fell. Several speeches by Federal Reserve officials and a series of economic indicators, including consumer price data, are expected this week, with investors keenly watching out for any signs of recession. My take: the underlying problem of the market is that the administration's approach to trade imbalances is to try a cure that's worse than the disease. It's clear that investors favor either a pause or a different look at how to do this. It's very telling that of the many Trump supporters in the investment and business community, it doesn't look like there's anybody stepping up and endorsing the administration's approach to tariffs. The concerns expressed by investors and many bigwigs have to be taken into consideration. The market turmoil could drag down wealth and in confidence. While I still believe that the US is well positioned to weather unsettled times, it isn't immune to these market challenges. And that's a wrap for today, my dear viewers. If you got value from this, please do subscribe, like, and share this video as much as possible. You can contact me at st@st-money.com for any further information. I will see you again tomorrow morning. In the meantime, happy investing, stay inspired, and remember, it's all about money.